Hello students, how are you all? I hope you are doing well. The previous video I have announced regarding CMA Inter Paper 6 Financial Accounting Revision classes. As I have discussed already, I am going to start recording revision classes or revision series for June 2025 attempt students. So in that process, here I have given already table of content. In that process, first what I am doing is I am starting recording of 20th chapter, that is hire purchase and installments sale transaction. After that, lease accounting. After that, insurance claims. After that, branch and departmental accounts. Sir, why you are recording these four first means these four chapters have weightage of 21 to 25 marks. 21 to 25 marks of weightage from these four chapters. How, sir? How 21 marks? They are giving three questions. They are giving three questions from these four chapters. Sir, how these three questions, sir? One, they are giving 3B for 7 marks and 6A and 6B for 14 marks. Is it clear? 3B 7 marks, 6A and 6B for 14 marks. And you may get one or two true or false, sorry, MCQ questions. You get two questions now, then 2 marks, 21 plus 2, 23. If you get two questions, 4 marks plus 21, 25 marks total you get. Yes or no, students? Here you can observe December 24 paper. Now I am showing you December 2024 question paper here. Okay. Observe question number 3B. Question number 3B is hire purchase question. Next, question number 6A, branch accounts. And question number 6B is nothing but insurance claims. Insurance claims. Yes or no, students? Insurance claims. So 21 marks. That's why first I am starting recording of these four lectures. So here I will release one by one chapter so that you can go through each chapter at a time. Yes or no, students? So chapter by chapter. Because for me also it becomes easy because when I record chapter by chapter, so that you people also get some time. First you revise the entire chapter of hire purchase. Next level you release, that means revise the lease accounting. After that, remaining chapters. Is it clear, students? Yes, sir. Now, without wasting much time, we enter into the concept hire purchase. So here I have prepared a small material of this hire purchase and installment system. So this I will upload in the Telegram channel. This I will upload in the Telegram channel. Yes, sir. No, students. Thumbs up. Yes, sir. So, sir, how can we follow your Telegram channel? So simply you can type PC Rao and join in that Telegram channel. So I will try to post these materials and video links also in that Telegram channel. Is it clear? Yes, sir. Yes, sir. Now look at, sir. Will we get a question from this chapter for sure? I have already shown you we have four chapters. Out of four chapters, they are giving three questions. They are giving three questions. What about hire purchase? If you observe, December 2024, they have asked a question from hire purchase 3B. Next, June 2024, June 2024 also, they have asked a question 3B. Is it? Next, December 2023, they didn't ask any question from this hire purchase. Let me check once again. 2B, no. 3A, bills of exchange. 3B, it is lease. The leasing question. Next, that means based on the past trends, based on the past trends, they are asking most of the cases between lease accounting and hire purchase. Most of the cases they are asking hire purchase. And in June 2023 attempt also, they have asked a question from hire purchase only. Question number 8. Yeah, 8B. 8B. Is it? Yes, sir. Fine. Next, look at. So that is the importance we have for this hire purchase. And most of the students they get confusion in the area of calculation of cash price and interest. Yes or no? Now, once you watch this video from the beginning to the end, then all your doubts gets clarified. Clear? Right, sir. Now, look at first of all, why hire purchase and installment system? Why? What is the objective or what is the purpose of this hire purchase and installment system? To make you understand, to understand this concept, first let us take one small example here. One small example. Observe. So, Avengers Construction Limited is a construction company. Fine. So, construction company means what? They construct the buildings and roads or infrastructure, whatever it may be. Right. They need huge machinery. For construction purpose, we need huge machineries. Now, the total purchase cost of machinery is 5 crore. Machinery being for it's a construction company, so machinery becomes asset for us. Machinery becomes asset for us. Yes or no, students? Yes, sir. Now tell me, we need 5 crore amount to purchase this machinery. As a CFO of the company, Chief Financial Officer of the company, now tell me, how do you deal with this situation? Sir, what is the meaning of how do you deal with this situation? Means to purchase this asset, we need source now, we need funds. How do you arrange funds to purchase this machinery? That is the question here. You may say, sir, what is this, sir? We can simply pay cash and purchase the asset. Yes, what about that cash? How this cash is procured? Sir, capital we invest, na, sir, 5 crore rupees. Or we borrow some loan from bank, sir. Or we take the asset on credit basis, sir. Within 1 month, 2 months, we will repay that asset, sir. Yes, these many options we have. But apart from these options, we have another option called hire purchase. Another option called hire purchase. What is this hire purchase? To understand this, let me give you a small example here. Come to this example. ABC Limited, DEF Limited. ABC Limited is seller company. ABC Limited is a seller. ABC Limited seller. DEF Limited buyer. Buyer. Observe. Seller will sell goods for cash. At the same time on credit. We also purchase goods or asset for cash at the same time on credit. Is it clear? Right. Suppose if we don't have sufficient cash to buy the goods or asset, whatever it may be, then what is the situation? Next, credit. Credit means we have to pay within 1 month or 2 months or maximum of 3 months. So what we do here, DEF Limited will enter into an agreement. DEF Limited will enter into an agreement with ABC Limited. What is that? Hello ABC Limited, I will buy the asset 5 crore now. I will buy the asset 5 crore. What is the value of asset? 5 crore. At present, I don't have any 5 crore rupee. Okay. Now, what I do is, I will pay 0.1 crore. 0. Okay. Here I will write 10 lakhs. So, 10 lakhs. I will pay 10 lakh for ease of understanding. What is the remaining amount payable? 4 crore 90 lakhs. So, 4.9 CR. Is it clear, everybody? Yes, sir. Now, you people tell me how this 4.9 crore we pay. Will you pay within 1 month or 2 months time? No, sir. This 4.9 crore I will pay in installments. I will pay in installments, which includes interest also. Which includes interest also. Yes or no? Yes, sir. So this type of agreement is called hire purchase agreement. It's simple. Type of agreement is called hire purchase agreement. What happens here? The buyer will enter into an agreement with the seller. Seller, what is that? So whatever the purchase price of the asset we have, what is the purchase cost of the item or goods or asset, whatever we have, that amount we pay in installments. Before entering into an agreement, first we pay some amount. This is called down payment. This is called down payment. And the remaining amount is paid to the seller in installments. In installments. Okay. So this type of agreement is called hire purchase agreement. So what happens here? Now the position is transferred to me. In this transaction, what is happening? The position of the asset is transferred to me, but the ownership is not transferred. That is the condition here. The ownership is not at all transferred here. Why, sir? Because the ownership is transferred only after payment of last installment. Let us say this we are paying in 7 installment or 8 installment, 9 in 10 installments. After making 10th installment, then only the ownership of the asset gets transferred to you. Till that time, the ownership lies with the seller, but position, who is enjoying the position? Buyer. Clear, everybody? Now, so machinery is used by the buyer, but the ownership is not transferred. Only position is transferred. Is it clear? Right. Now, look at here. I will give you one more example. Suppose I want to buy a car which cost 10 lakh rupee. I want to buy a car which cost 10 lakh rupee, but I don't have sufficient cash, sufficient cash to buy this 10 lakh rupee worth of car. What I will do? First, I will make some 1 lakh down payment. 1 lakh down payment. Remaining 9 lakh rupee, I will pay in installments, EMIs, equated monthly installment. And this EMI includes interest part also. Yes, sir. EMI includes interest part also. Now, you people tell me in how many months you repay this amount. Let us say, sir, I will repay this total amount in 60 months, sir. Okay, fine. Do one thing. Take the car first. To take the car, use the car and pay installments. After final payment of 60th installment, I will transfer ownership to you. I will transfer ownership. Before that, a seller will not transfer ownership. Suppose in your home, if you have car, check the back side of the RC registration certificate you get now. Check the back side. Suppose if you find there the financier name, then that means this car is purchased by taking loan. Is the best example for hire purchase. Here, if the car is totally purchased with cash, then you don't find the financier name on the RC. Here, once 60th installment is cleared, once 60th payment EMI is cleared, now the car is again transferred. The ownership is transferred to you. The ownership is transferred to you by the finance company. This is the best example. Another one we have, suppose now I have purchased one AC which cost around 50,000 rupees. Assume I have purchased a air conditioner which cost around 50,000 rupees. Now, I don't have money to pay this 50,000 rupees. Let us say I have paid 10,000 rupees now and remaining amount payable 40,000 rupees. This I will pay in 20 installments, so that what is the per month installment? 2,000 rupees. How many installments I have to pay? 20 installments I have to pay. Now, what is happening here? Here I am using the asset, and the ownership is also transferred here. In this case, the ownership is transferred plus the asset also, position also transferred. This type of system we call it as installment system. Installment system. But this system is called hire purchase system. Hire purchase system. There is a slight difference between hire purchase system and installment system that you need to understand. In case of hire purchase system, only the position is transferred, but our ownership is transferred only after clearing the last installment. But in case of installment system, the position and ownership both are transferred to the buyer. Both are transferred to the buyer. Is it clear? You may ask, sir, if we are unable to pay the monthly installments, then what happens? In case of hire purchase, the seller will take back their asset. The seller will take back the asset, but in case of installment system, seller is not allowed to take back the asset. Why? The ownership is also transferred. Under installment system, the ownership is transferred, but under hire purchase system, the ownership is not transferred. That's why the seller will take back the asset. He has that right to take back the asset. But under installment system, he doesn't have any right to take back the asset. Why? Ownership is transferred. Best example, in your home, suppose you are having some 50 inch or 43 55 inches TV. Just ask your parents whether this is purchased with a full cash or in installments. Yes or no? Or laptop or whatever, some electronic gadgets, iPhones, iPads. Just ask your parents. So how we have purchased these gadgets or things? They may say in installments. Yes or no? Yes. That is installment system. Under installment system, what happens? Tell me. Under installment system, what happens? Position and ownership both are transferred. But under hire purchase, only position is transferred. Ownership is not transferred. First, try to make a difference between hire purchase and installment. Now, when we purchase any asset under hire purchase system, here we talk about hire purchase and installment, but accounting is similar. Accounting is same for hire purchase and installment system. But in under hire purchase, if we fail to pay the installment amount, then the asset is taken back by the seller. But under installment system, the asset is not taken back by the seller. That's why most of the cases, most of the problems are based on hire purchase system only. Yes sir, no? Yes sir. Clear everybody? Now as an accountant, what we have to do? When we purchase an asset under hire purchase system, then what is the accounting treatment? That is a question mark. When we purchase any asset, here generally assets are purchased under hire purchase. Assets are purchased under hire purchase system, not goods. So this hire purchase system applicable only for the expensive goods. For us it is asset, but for seller it is goods. The machinery which we are purchasing by paying for rupees 5 crore, that is asset for us, but for the seller ABC Limited it is goods. Hope you understood. Now seller, when he sells goods for cash, then what is the entry he records? Cash account debit to sales account. On credit basis, debtor account debit to sales account. At the same time, DEF Limited will record the entry for purchase of asset for cash, asset account debit to cash. On credit basis, asset account debit to creditor account. Then what is the accounting treatment when the asset is purchased under hire purchase system? That is the question mark. What is the accounting? That we have to see. Hope you understood. Now look at the concept of hire purchase. In case of credit sales, seller will be treated as creditor, buyer will be treated as debtor. But under hire purchase system, the name of the parties are different. Hire purchaser and hire vendor. Hire purchaser and hire vendor. Is it clear, students? Look at. So here I am providing material. You can observe here. The terminology which we use in hire purchase is very important. Look at, first of all, hire purchase agreement. What is hire purchase agreement, sir? So it is an agreement of credit agreement between buyer and seller regarding what? The buyer pays an initial down payment for the purchase of asset, and the remaining balance plus interest is paid off in installments over an agreed period. Next, after the total purchase price is paid, the buyer becomes the owner of the product. This is the agreement. When you buy any asset or any item next time onwards, if you are buying any some laptops or any electronic gadgets of higher amounts, just observe that when you are buying under installment system now, Bajaj Finance or IDFC Finance, whatever it may be, so you have to sign on a agreement. Or nowadays everything is digital now, you have to accept it. That is nothing but installment agreement. That is nothing but agreement. Here also hire purchase agreement. Clear? Once the hire purchase agreement is done, normally these agreements are for very expensive goods. For small things we pay cash, but for heavy items then we enter into hire purchase. Clear? Hire purchaser. Hire purchaser, he is a person who purchased the asset on hire purchase basis. Clear? So he is also called hirer. Next, hire vendor. He is a person who sells goods on hire purchase. The person who sells goods under hire purchase agreement. Next one, cash price. Cash price means what? You buy the asset by paying cash. Suppose if you are ready to pay cash for the asset, then what is the price of it? It is called cash price. It is the actual price of goods charged under the normal cash sale or the price at which the hirer may purchase the goods for cash. Suppose if I want to buy a laptop, MacBook, assume. So its cost is 1 lakh. Yes, sir. So I am paying 1 lakh rupee straight away. On the spot, I am paying 1 lakh. This is the cash price. Right. Next one, down payment. Down payment. Suppose I am unable to pay this amount at the time of purchase. So that what I will do? First, I will pay some initial amount. In our example, at the time of purchasing car, 10 lakhs is the cash price and 1 lakh is down payment. Down payment. Here. Next one. It is the part amount that the buyer should pay at the time of hire purchase agreement. Fine. Interest. So this is very very important, student. Our entire hire purchase accounting depends on this interest calculation, and most of the students they get confusion in this interest calculation. If you watch this video till the end, I already said that all your doubts gets clarified. Look at interest part. As I am paying amount in installments now, remaining 9 lakhs I am paying in 60 months installments. In 60 months, so for 9 lakhs rupee I have to pay interest part. This is our financial charge. Clear? Look at. So it is the finance charge payable by the hire purchaser for not paying the total cash price at the time of hire purchase agreement. If I pay total amount at the time of purchase itself, I need not to pay any interest. But I am not paying any. I am not paying cash price at the time of agreement, so that I have to pay some interest. You people know very well how to calculate interest. PTR by 100. PTR by 100, principal, time and rate. Here, principal outstanding into rate by 100, time factor 1 year. Clear? This is the calculation of interest, but it is not that simple, students. We try to understand various, we have some various cases how to calculate interest. We discuss there. Next one, higher purchase price. Higher purchase price is nothing but cash price plus interest. Cash price plus interest. See, suppose my cash price of car is 10 lakhs. If I pay total cash at the time of purchase itself, then what is my cost of car? 10 lakhs. But now I am paying 1 lakh only down payment, remaining amount in installments. Let us say for 60 months, the total interest is 3 lakhs. The total interest amount is 3 lakhs. Total interest amount is 3 lakhs. Now you people say, if anybody asks, sir, what is the total cost of the car? Then we will say 10 lakhs I have paid for the car less 3 lakhs rupee installment, sorry, interest. Then what is my total hire purchase price of the car? 13 lakhs is my total hire purchase of the car. This 13 lakh includes, observe carefully, cash price and interest portion. Yes or no, students? Cash price plus interest portion, 13 lakhs. This is called hire purchase price. Or hire purchase price we can calculate in different manner. What is that? Down payment less total of all installments. Down payment plus total of all installments. See, look at here. Here down payment is how much? 1 lakh. Down payment is how much? 1 lakh plus total of all installments. So put together 60 months we have to pay amount na. 60 months we have to pay amount. Every month some amount we have to pay for 60 months. Total together how much? 9 lakhs principal amount, 3 lakhs interest. Total we pay 12 lakhs na. Total we pay 12 lakhs in a period of 60 months. Total of all installments. This becomes 13 lakh. This is our higher purchase price. This is our higher purchase price. Hope you understood. Yes, sir. Next one. Installment. So this is the amount which we pay in every month. So every month or quarterly or half yearly or yearly. This installment amount includes principal amount less interest. This installment amount includes principal amount plus interest. And installment amount may be fixed amount of installment or variable amount of installment. Generally, if you borrow a car or if you take a loan, generally the amount of installment is fixed. In this fixed installment, amount is fixed, but principal amount and interest is variable. Sometimes the amount of installment itself is variable. The amount of installment itself is variable. Hope you understood. Next one. Now, what is the accounting in the books of hire purchaser? First, we discuss the accounting treatment in the books of hire purchaser. Before recording the transactions in the books of hire purchaser, we need to identify certain data or we need to collect certain data. What is that, sir? First one, date of purchase of asset. On which date the asset is purchased? Why, sir? Actually, we have to calculate depreciation on the asset, na? So, for calculation of depreciation on the asset, we need date of purchase. From the date of purchase to the date of closing the books of accounts, we calculate interest. Second one, cash price, because we have to record the entry in our books at cash price, not at hire purchase price. Here we have two prices, do remember. One is cash price, another one is hire purchase price. We record the entry of purchase of asset at cash price. That's why identifying cash price is very, very important. Next one, the amount of down payment. So, because we are paying amount for down payment, na, we have to record entry for that. So, that's why also identify the down payment. Next one, amount of loan borrowed. Why, sir? Why should we calculate amount of loan borrowed? Because on the borrowed amount, we have to calculate interest now. That's why identify the loan amount. If it is given in the problem, okay. Otherwise, we can calculate. Next one, rate of interest. Practically, what happens is they give you the amortization table or installment table. Amortization table means what is the installment amount? What is the installment amount? So I will show you the amortization table here. Just a minute. Here I have prepared an amortization table. Here you can observe. Yes, this is the amortization table, students. When you take a loan, I will show you how to prepare this. Don't worry. When you take a loan, then they will give you a statement like this. Every month, how much interest? See, EMI amount, EMI amount. Out of that, how much is interest? Out of that, how much is principal? And what is the remaining closing balance? Observe this type of statement you get. This is called amortization table. Clear? So I will tell you how to prepare this. Wait for some time. Next, rate of interest. So this becomes important in the hire purchase system. Next one, number of installments and amount of each installment. In how many installments the amount is paid, repaid, plus each installment, how much amount. Next, date of payment of installment. Why? Because on that date we have to pay amount na. For payment we have to record the entry. Next one, date of closing the books of accounts. Sir, why should we need this information? Why? Because at the end of the year or at the time of closing the books of accounts, we have to calculate depreciation. We have to calculate depreciation, and for that purpose, we need date of closing the books of accounts. Clear? So, if you have this data, then we can give accounting easily. Now look at in the books of hire purchaser, we can follow two methods. We can follow two methods. First, I will explain first method, then I will come to second method. Is it clear? First one. So, what is the first transaction? Purchase of asset under hire purchase. Entry. We are purchasing asset now. I already said we purchase asset under hire purchase system. So, asset account debit to hire vendor account. Asset account debit to hire vendor account. Here the entry is written at cash price. Don't forget. Here the entry written at cash price. If cash price is available in the problem, then we can write. Otherwise, we need to calculate. Here, otherwise we need to calculate. Second one, when a down payment is made, they are paying some amount na entry. Hire vendor account debit to cash or bank account. Next one, when an installment becomes due, after that what we do, we have to pay installment amount. I said installment amount includes principal amount plus interest. Interest is finance charge for us, is expense. It is expense. So interest amount. First write down the entry for interest amount due. Write down the entry for interest amount due. Interest is expense for us, so interest account debit to hire vendor account. To whom this interest is payable? Hire vendor. After that, we are making payment of installment entry. Hire vendor account debit to bank account. This installment amount includes principal plus interest. At the end of the year, now we charge depreciation. You have to apply the concept of depreciation here. So depreciation is applied on the value of asset, cash price. Do remember, not at higher purchase price. Next one, depreciation account debit to asset account. Here we have two nominal accounts now. One is interest account, another one is depreciation. At the end of the year, these two we have to transfer to P&L account. So for closing interest and depreciation, profit and loss account debit to interest account to depreciation account. Here the biggest problem comes. Once you know higher per cash price now, once you know cash price, then we can able to record first entry. Next one, fourth entry, depreciation. You don't know cash price, first of all you need to calculate. Now the question comes, how to calculate cash price? How to calculate cash price? Less. Now to record the interest amount due, we should calculate interest included in each installment. I repeat, interest included in each installment. If it is given in the problem, then we can easily write interest included in each installment. Otherwise, we need to calculate. So these two calculations are important in our hire purchase system problems. I said practically we prepare amortization table like this, an amortization table like this. Here itself you can find installment amount, interest amount and principal amount also. You need not to worry, but in the examination problems, you need to calculate how much of interest included in each installment. This is the biggest problem for students. Here the confusion comes. Is it clear? Next one. Presentation in the balance sheet. How do we present the same data in the balance sheet? Look at here. Here we have asset account now. Here we have how many accounts created? Observe. This interest depreciation closed. Interest depreciation accounts closed. Now remaining accounts left. Asset account, hire vendor account. That's it. Cash account, bank account anyway we show. But here we have to show asset account and hire vendor account in the balance sheet. Asset is asset side, balance sheet asset side. Hire vendor liability side. That's it. Look at liability side, hire purchase creditors. The amount left in the hire purchase creditors account. We prepare a hire vendor account now. Whatever the balance left at the end of the year, that is recorded here. Now asset account minus depreciation, remaining amount we show. This is how we present. Second method I will discuss later. Okay, now look at how to calculate the cash price and interest. If it is not given in the problem, they will not give you this information in the problem. 100% you have to calculate here. So how to, now the question comes, how to calculate cash price and interest. Observe, you take last four papers. In all these four papers, the question is interest calculation only. Here also look at calculate interest included in each installment and prepare machinery account. Next question also same. You are required to calculate interest paid in each installment. Next also December 23 anyway we didn't get. Here also you are required to calculate the cash price of cars and the interest in each installment. Now you understood this. We are going to discuss the same only. Here. Now come to the question of how to calculate higher purchase cash price. Here write down cash price Here it is, cash price and interest. How to calculate cash price and interest? To calculate this, we have different situations, students. So here I have listed the situations observed. First one, first one. Generally, practically, we know the cash price. Yes. We know how much down payment we are making. Yes. And we know we ask the vendor, seller, what is the interest that you are going to charge. Next one, in how many installments the amount we have to pay. 12 months, 24 months, or 36 months, 4 years, 5 years, 6 years, or 10 years. What is the time period? Based on this information, what we do is we calculate this amortization table. Calculate this amortization table. Observe. By taking this information, we calculate this amortization table. With this, what we calculate? With this, what we calculate? What is the EMI amount we calculate? What is the EMI amount plus how much interest is included in each installment? How much interest is included in each installment? And what is the amount closing balance of liability? Here you can observe closing balance of liability. Clear, everybody? So here now I will show you uh, 5 minutes. Then I will show you how to calculate this. You people also observe carefully. This is very simple, students. You people also can calculate amortization table. Okay. So okay. Here the cash price of the asset is 10 lakhs. For example, cash price of the asset is 10 lakhs. I am paying 1.5 lakh down payment. Next, what is the loan I am taking now? 8 lakh 50,000 is the loan amount. On that, let us say the interest portion is 12%. Interest is 12% per annum. So here, rate of interest, how do we calculate? Simply is equal to 12% means, how can I write 12%? 0.12 I can write. 12% can I write in 0.12? This 12% is per annum. Na? Generally, interest is expressed per annum. Now, here we need to calculate per month interest. Per month means 0.12 divided by 12. 0.12 divided by 12. See, 12% per annum means 1% per month. Means 0.1. Same calculation we have to do here. So, rate of interest is equal to 0.12 divided by 12 months, so that we get 0.01. That is the rate of interest. Next one, number of installment. In how many installment the amount is paid? 48 months. Now, how to calculate this interest? To calculate interest, we need to use the formula PMT is equal to PMT. This is the interest calculation. Okay. Here they are asking rate, number of payment periods, and present value, future value, type. Here we give rate. Rate already we have given 0.01. Select, comma. Next, NPR. How many months we have to pay? 48 months, comma. And what is the present value? What is the loan amount here? 8.5 lakh. Next, what is the future value? Future value must be 0, because till the loan becomes 0, we have to pay the amount. This we have to put it in a bracket. 0. Next one. That's it. After that, put one more. Yeah. Now look at. This is the interest EMI amount. Hope you understood. Now, and this is the every month EMI into 48 months we have to pay. Now we need to calculate amortization table. Means in this installment, what is the amount of interest and principal, and what is the outstanding amount of loan. Here for that, take these columns. Sorry, columns. Number of EMIs. How many EMIs? 48. Here I am taking date from 1st February 2025. 1st February 2025, 48 months. The last installment date is 1/1/2029. Next, here, what is the due amount here? 8.5 lakh. What is the due amount here? 8.5 lakh. Yes. Now, what is the EMI here? This one only. So, is equal to this one. And this EMI is fixed. EMI we should not change. Every month this is fixed. For that, first we have to freeze this cell. For that, do like this. Yes. Now this column is freezed. So drag this column till 48 months. Drag this column till 48 months. That's it. This EMI is fixed till 48 months. Next one, interest. So interest is calculated at the amount beginning of the month, right? Now, how do we calculate? Is equal to amount into interest rate. Interest rate is how much? This one. And this interest rate is fixed. Interest rate is also fixed. For that, what we have to do? Freeze this cell also. Freeze this cell also. That's it. Yes. What is the interest here? 8,500. And this also simply drag till 48 months. Next one. What is the principal amount included? Principal amount. Nothing but EMI amount minus interest. Nothing but principal. Yes, sir. Is equal to EMI minus interest. This is the principal amount. So this also we drag. Next one. So what is the closing balance, sir? Closing balance is nothing but amount due at the beginning of the month minus principal amount, not EMI amount, principal amount. So that we get closing balance is equal to minus opening amount minus principal amount repaid. This is the due amount 8,36,116.24, and this becomes opening balance for the next month. So here what we take is we take the column, this column here we take. Clear everybody? Right. Next one. Now drag this column. Next one. Drag this column also. Drag this. Ultimately, the EMI becomes 0. Observe. Last installment 48 months. This is the outstanding amount. On that interest, so total becomes 0. This is our amortization table. Hope you understood this. Yes, sir. This, so by keeping this statement, we record the entries. By keeping this statement, we record the entries. But in the examination, it is not possible. The examination, it is not possible. That's why what we do, we calculate, we calculate this interest amount and cash price. Cash price is given, then we have to calculate interest. If cash price is also not given, then we have to calculate cash price and interest. These two things are very, very important in our hire purchase entries. Clear, students? Yes. So if you have laptops, no, just do calculate this amortization table once again. Fine. Now come to various situations. Anyway, first situation you don't get in the exam. Just for you people to make you understand, I have given this. Cash price is given. Practically, this information we know: cash price, down payment, interest rate, and number of installments. With this, what we calculate? With this, what we calculate? EMI, equated monthly installment, we calculate. But this is not given in the exam. So, second situation, look at cash price is given, down payment is given, interest rate is also given, installment amount given. What they have given? Installment amount. What is the difference between first one and second one? Here, number of installments given, we calculated EMI. But here, installment amount is given, we have to calculate interest. This is very simple. This is very simple. That means what? Observe in this table, they are giving EMI. Now, what we have to calculate? Interest we have to calculate. How do we calculate interest? Amount due before making EMI, amount due before paying EMI into rate of interest. Amount due 8,50,000 into rate of interest 0.01. So that we got 8,500. The same time, second installment, observe amount due 8,36,116.24 into 0.01%. So that we got 8,361.16. Like this, we have to calculate interest in our problems. For that, we try to solve one example. You just open your study material illustration 1 so that we calculate interest there. So here also I am opening same study material. Look at illustration 1. X purchases a car on hire purchase system. See, this is date of purchase. The total cash price. Cash price is given 4.5 lakh. Now we record the entry. Car account debit to hire vendor account at what price? 4.5 lakh. Here they didn't give interest. Our main target in this problem is to calculate interest part. Payable 90,000 down payment. So what is the entry for making down payment? Hire vendor account debit to bank account 90,000. Fine. And the remaining amount payable. See, 4.5 lakh is the total cash price minus 90,000 is paid immediately. What is the remaining amount payable? 3,60,000. And the interest is charged on this amount. Now the question comes, how much is interest? Clear everybody? This amount we pay in 3 installments of 1,70,000, 1,50,000 and 1,08,460 payable at the end of first, second and third year respectively. Means this 1,70,000, just add 1,70,000, add these 3 installments, how much amount you are getting? 1,70,000 plus 1,50,000 plus 1,08,460. Total it comes around 4,28,460. But actually how much amount we have to pay? 3,60,000. But how much amount we are paying in 3 installments? 4,28,460. Extra we are paying na? How much extra amount we are paying? 68,460 rupees extra we are paying. This is nothing but interest part. This is nothing but interest part. We know total interest is 68,460. We know that total interest is 68,460. But what we need? Interest included in each installment. What is the interest part in 1,70,000? And what is the interest part in 1,50,000? And what is the interest part in 1,08,000? That we need to calculate. For that, we need rate of interest. Now, observe. The interest rate is 10%. The interest rate is 10%. Now, how do we calculate? This is very simple, students. Look at, if you get this data, first identify which type of data you are getting. This calculation is applicable only when you get cash price and rate of interest and installment amount also. Then this table is applicable. Look at here. Starting date is 1/1/2021. Next, these are the due dates. Now, opening balance. Initially, how much amount we have to pay? 4.5 lakh. Down payment we paid 90,000. What is the remaining amount we have to pay? 3,60,000. Now, after making payment of 90, what is the amount to due? 3 lakh 60. How much installment we are paying? 1 lakh 70. Now, what is the interest included in this 1 lakh 70? Nothing but 3 lakh 60,000 is the outstanding amount for the year, and into 10%, nothing but 36,000 rupees we pay interest. 1 lakh 70 is the installment amount, 36,000 interest, remaining 1 lakh 34, what? Principal amount. What is the amount to due? Simply 3 lakh 60 minus 1 lakh 34, 2 lakh 26,000 is the due amount. Clear? Next one. Next year beginning, what is the amount to due? 2 lakh 26. Again, for 2 lakh 26,000 we pay 10% interest na. So 22,600 we pay interest. Here we are paying amount in installments. Installment amount is 150. Out of 150, what is the interest portion? 22,600. What is the principal portion? 1,27,400. Observe. Now, what is the principal amount left? Principal amount left, nothing but 2 lakh 26 is the outstanding amount at the beginning of the year minus 127,400. So, remaining amount is 98,600. This becomes opening balance. On that, we pay interest 9,860. Third installment is how much? 1,08,460 minus 9,860 interest. Principal amount is 98,600. If you observe here, I said installment amount may be equal. Installment amount may be equal or variable. Here, if you observe, installment amount, is it equal or variable? Variable. And this is the principal amount paid in each installment, and this is the interest amount paid in each installment. Hope you understood. Yes, sir. This is the calculation. Observe. Pause the video and try to revise the problem once again. Next question. Second type of situation is, now this time they don't give cash price. They don't give cash price, but they give you interest rate and installment also. They give you interest rate and installment. Then how do we calculate? It is very, very important and little bit confusing. Little bit confusing. They are not giving cash price, but they are giving interest rate and they are giving installment. Here what we do is we calculate interest from the last installment. From the last installment. To make you understand this concept, look at illustration 2. Illustration 2. Observe the question first. X purchased a TV on hire purchase system. Fine. As per terms, he required to pay 3,000 down payment. Fine. 4,000 at the end of first year, 3,000 at the end of second year, and 5,000 at the end of third year. Calculate total installments. See, down payment 3,000 plus installment amounts 4,000, 3,000, 7,000, 12,000. What is this 15,000 rupees? This is called hire purchase price. This 15,000 is nothing but hire purchase price. But which price we need? Cash price. Which price we need? Cash price. Calculate cash price. Sir, why should we calculate cash price here? Because we have to record the first entry now. Asset account debit to hire vendor account. Asset account debit to hire vendor account. To record that entry, which amount you need? Cash price. Now, how do we calculate cash price? Look at. Observe the difference between first problem and second problem. Here, we know the cash price. We know the cash price. Total cash price minus down payment. Total cash price minus down payment. Minus down payment. Remaining amount is payable. Remaining amount is payable. Like this we have calculated. But here if you observe, we don't have any cash price. That's why we don't know the amount outstanding at the beginning of the year. We don't know the amount outstanding at the beginning of the year. If you don't know this one, na, if you don't know this one, then it is not possible. Not possible. Not possible. Here, how do we calculate? We don't know this 4,50,000. You don't know 4,50,000, then how to know that what is the amount outstanding at the end of first year? Here, then what we have to do? We have to do reverse calculation here. Same table we simply reverse. Same table reverse means, observe here, what is the last installment we are paying? What is the last installment we are paying? 1,08,460, sir. Very good. This amount includes installment and interest. This amount includes installment and interest. How to calculate, sir? How to calculate? Simple. Interest is how much? 12%. In this case, we calculate interest like this: 1,08,460 into 12% interest, 12 by 112. Because this includes interest, na? This includes interest. In this type of situation, we have to do like this: 12 by 112. If the rate of interest is 10%, 10 by 110. Look at 1,08,460 to 12 by 112. How much we are getting? 11,000. Just a minute. 1,08,460. No, no, no. Actually, in this problem, what is the interest rate? 10%. Sorry, my mistake. In this problem, what is the interest rate? 10%. So 10 by 110 into 10 by 110. How much you are getting? 9,860. Understood? The last installment, if you observe, this includes interest plus investment. Sorry, principal amount plus interest. Principal amount plus interest. Observe carefully. Principal amount plus interest. Sir, why don't we calculate in the first installment, sir? Why don't we apply the same concept in the first installment? It is not possible to apply. It is not possible to apply the first installment. It is possible to apply only in the third installment. Why, sir? You just think you can understand. Now look at it. So now we apply the same. So 1,08,000, 9,860 is the interest. Remaining amount is the principal amount. Principal amount. Sir, why it is not possible in the first installment? Okay, look at the first installment is, suppose the first installment is how much? Here 1,70,000. Now just you calculate 1,70,000 into 10 by 110. How much amount you are getting? 15,454 rupees we are getting. Observe, 15,454. But here our calculation is 1,000. Is it clear, everybody? So third installment it is possible. Now here we apply the reverse situation. Observe here. What is the third installment? 5,000, sir. How much interest is included? 4,536. What is the installment amount here? 5,000. 5,000 minus 436. What is the cash price? 4,464 is the principal amount. Principal amount is nothing but cash price. Next step, 4,464. To this, add 3,000 rupees balance amount. Add 3,000 rupees second installment. This is second installment. Second installment. How much amount you are getting? 7,464. If you observe, this 3,000 includes what? Interest also. Now that means 7,464 includes interest. 7,464 includes interest. So 7,464 into 12 by 112. How much amount you are getting? Some 800 rupees. 800 rupees. You just calculate. Okay. So minus 7,464. 7,464. How much amount you are getting? 6,664. To this, what we have to add? Installment. First installment. Now, this amount includes interest. Here we are calculating reverse calculation. Interest is reverse calculation. 10,664. The moment you calculate this interest portion, remaining problem is easy. 10,664. On this apply 12 by 112. You get 1143. 10,664 minus 1143, nothing but 9,521 is the cash price. Finally, we have paid down payment 3,000, nothing but 12,521 rupee is the cash price of the asset. Cash price of the asset. Now, if you want, you can cross check. What is the total cash price of the asset? 12,521 minus how much down payment we are paying? 3,000. What is the remaining amount payable? 9521. 9521. On this, generally we have to pay 12% interest now. So calculate 9521 into 12% directly here. Now this time 12% directly. How much you are getting? 1142.52. Round figure 1150. Okay. So to put it simple, whatever the above table we have prepared in illustration 1, same table becomes reverse here. You need to practice a lot this concept. Once this concept is clear, then you can solve hire purchase problem. Hope you understood this concept. Next situation, next situation, fourth situation. This time they will not give you cash price and interest rate also. They will not give you cash price and interest rate. They will give you just installment. Just installments. Sir, in this case, how do we calculate cash price plus interest included in each installment, sir? Yes. In this case, you people observe they are giving installment. Na? Installment amount is nothing but principal amount, principal plus interest. Sometimes this principal is fixed in each installment. Sometimes this principal is variable in each installment. Variable in each installment. Observe students. Generally, installment includes principal portion plus interest portion. If you observe in our example, yeah, here principal amount, is the principal amount same or different? Look at each installment, the principal amount is variable, changing. The principal amount is not same, and interest is also not same. Interest is changing, principal amount is also changing, but EMI is fixed. EMI is fixed. But now in this case, what happens is, keenly observe students, if you get in the problem that the principal amount is fixed in each installment, the principal amount is fixed in each installment, means then what is the variable factor here? Interest. What is the variable factor here? Interest. Principal amount is fixed. What is changing? Interest is changing. Interest is changing. Based on this principle, we solve the fourth scenario. What is that? They simply give you installment amount. Yes, down payment also. Installment amount only they give you. They don't give you cash price and interest rate also they didn't give. Don't give, sorry. In this case, observe carefully whether the principal amount included in each installment is same or different. If the principal amount included in each installment is same, then this concept applies. Clear? So based on this concept, we got a problem in December 2024. Look at 3B. Sir, on 1st April 2021, RV Limited purchased a machine on hire purchase system whose cash price is 12 lakhs. Generally, cash price is how much? 12 lakhs. The higher purchase price of the machine is 15 lakh. What is the difference here? 3 lakhs. This 3 lakhs is nothing but what? Interest. This 3 lakhs is nothing but what? Interest. 3 lakh was payable immediately and the balance was to be paid. Observe carefully, 12 lakhs is the cash price. 3 lakhs we are paying immediately. What is the balance amount we have to pay? 9 lakh principal amount we have to pay. 9 lakhs principal amount we have to pay in 3 equal annual installments. Means this 9 lakh we have to pay 3 equal annual installments. Means 3 lakhs principal amount plus additionally we have to pay interest. Plus additionally we have to pay interest. This is the assumption in this. The books are closed on 31st March each year. The company charged depreciation. You observe in this problem they didn't give any interest rate. Already I have made a video on solutions, suggested answers for this December 2024 paper, question number 1 to 4. You can see the answer that video. Is it clear? Now look at, to make you understand this example, this situation, look at example 4. Sorry, illustration 3. X and Co purchased a motor car on April 1st, 2023 on hire purchase, paying 60,000 cash down. So we are paying 60,000. Fine. And balance 4 annual installments. 4 annual installments. 55,000, 50,000, 45,000, 40. Observe here, installment amount is variable. Installment amount is variable. First installment 55, second installment 50, fourth installment 45, fifth installment 40. That means these are the installments. If you add all these things, this is down payment and this is total of all installments. So that what we get? Higher purchase price. What we get? Higher purchase price. 2.5 lakh. 2.5 lakh is the higher purchase price. Clear? But we don't know cash price. We don't know cash price. Do remember. Each installment comprising equal amount. This point is very important. Equal amount of cash price at the end of each accounting period. So this installment includes this installment. Okay, I will show you like this. This 55,000 includes principal amount and interest amount. This 50,000 also include principal amount, interest amount. This also include principal interest. This also include principal interest. The principal component is same. The principal component is same. Principal amount in each installment is same. Then what is changing? Interest is. In this case, how do we calculate? Very, very simple. Look at. So we frame this equation. Let x be the principal amount, I be the interest. This is fourth installment, students. This is fourth installment. Observe. In the fourth installment, principal amount plus interest. Third installment, principal amount is constant. Principal amount is constant. Whatever the interest we pay in the last installment, simply we pay the 2 times of that interest in the third installment. When it comes to third installment, we pay 3 times of interest. When it comes to first installment, we pay 4 times of interest. I repeat. First, you observe last installment. This consists of principal amount plus interest amount. When it comes to third installment, now whatever the interest we pay in the last installment, the third installment we pay 2 times for that. 2 times for that. Next one, 3 times for that. Next one, 4 times of interest we pay. So here what is changing? Interest is changing, but principal amount same. So what we do is you take any two equations. You take any two equations and solve it. So here I am taking first two equations and I am solving these two equations. what I get? X cancel, I, 1 I we get now, 2I minus 1I, I is equal to difference amount 45 minus 40, 5000. So here interest is 5000 rupees. I means what? Interest included in last installment. 2I means what? Interest included in third installment. 3I means what? Interest included in second installment. 4I is means what? Interest included in first installment. Generally, in the first installment, interest is more now. Second installment decreases. Third installment decreases. Fourth installment decreases. Observe carefully. But principal amount is same. This is the concept of third illustration. Sir, table they have given. First installment, how much we are paying? 55. Out of that, 20,000 is interest, principal amount. Second installment, 50,000 we are paying. Interest is how much? 15,000. Cash price 35. Third installment we are paying 45,000. Out of that, interest is 10,000. Here we have calculated now 10,000. Cash price 35. Fourth installment we are paying 40,000, whereas interest is 5,000, 35,000. Observe here. In each installment, this component is same. In each installment, this component is same. But what is changing? Interest is changing. Why interest is changing? Because first installment we have to pay interest on more amount. Last installment we have to pay interest on less amount. Finally, what is the total cash price? 2 lakhs. What's the total cash price? 2 lakhs. Observe. Based on this table, now we start recording entries. The recording entries are easy, but but identifying the cash price plus interest components are very very important. That becomes difficult for the students in this hire purchase. Hope you understood. Next situation also we have, that is fourth situation, when reference to the annuity table interest is given. This we discuss later. Okay. Next one. Accounting in the books of hire vendor. Accounting in the books of hire vendor. Before this, now come to second method of entries recording interest suspense account. Interest suspense account. What is this interest suspense account, sir? Only one entry is different. Remaining all accounting treatment is same. Look at the time of purchase of asset, what is the entry we record? Asset account debit to hire vendor. Asset account debit to hire vendor. Here, whatever the total interest payable, whatever the total interest payable to the hire vendor, that is also we recognize. Here, what is the total interest? 50,000. What the total interest? 50,000. So here what we do is simply we write interest part 50,000. 2 lakhs is the cash price. To the vendor, how much we have to pay total? 2 lakh 50,000. Total to the hire vendor we have to pay 2 lakh 50. Out of that, 2 lakhs is the cash price and remaining amount is nothing but interest. That's why we are transferring that interest to interest suspense account. That is the difference. Next one, down payment, same entry. Next one, interest due. Interest due. Normally, what is the entry we record for that? Interest account debit to hire vendor. In our first entry, already hire vendor account is credited with interest now. Already hire vendor account is credited with interest. This time, we don't credit hire vendor account. Instead of that, we credit simply interest suspense account. Is the entry. Remaining entries are common. So the difference between cash price and interest suspense method is only interest component. Clear? So what we do here under interest suspense method, whatever the total interest we have to pay to the hire vendor, the total amount we transfer to a separate account called interest suspense account. Clear, students? Next one. How do we present this? So here how many accounts we have? Asset account we have, interest suspense account we have, and hire vendor account we have. Asset account anyway balance sheet asset side, asset cost minus depreciation. Now hire purchase creditor liability minus interest suspense account deduct for that from that and remaining amount. This is the presentation. Now what is the accounting treatment in the books of hire vendor? For hire vendor this becomes sales now. So what is the entry for that? Hire. So here hire purchaser account debit. So make a small correction. Hire purchaser account debit to hire purchase sales account. Clear? Now receipt of down payment. We receive amount na bank account debit to hire purchaser account. When installment becomes due, first interest amount due. Interest is expense for hire purchaser, income for us. So hire purchaser account debit to interest account. Receipt of installment, bank account debit to hire purchaser account. Interest is income that is transferred to P&L account at the end of the year. So for that, over. How do we present this information in the balance sheet? See, hire purchase only here we have hire purchase sales anyway we transfer to trading account na. So hire purchase account is asset for us. So hire purchase debtors account minus not depreciation here. A copy paste mistake. Just write down like this. Hire purchase debtors. That's it. Over. This is the treatment in the books of hire vendor. Now here you can observe a simple problem on this illustration 4, not illustration 4, illustration 5. Illustration 5. Observe. On 1/1/2021, Mr. X took delivery from Mr. Y 5 machines on hire purchase system, 4,000 being paid on delivery and the balance in 5 installments of 6,000 each. Here, each 6,000 is not each machine, each installment 6,000. Some people they may commit mistake here 6,000 into 5 machines. No. Okay. So 6,000 each means each installment 6,000. How many installments here? 5 installment. 5 installment into 6,000, 30,000 plus 4,000 is the down payment. So total 34,000 is nothing but higher purchase price. 34,000 is the higher purchase price. Payable annually on 31st December. We have to pay 31st December every year. The vendor company charges 5% interest per annum on yearly balances. Cash price of 5 machines was 30,000. Observe which information they have given in the problem. They have given cash price and also they have given down payment. Next one, rate of interest. Next one, installment amount. Installment amount 6,000 each. This information means which situation? Situation 1. Which situation? Situation 1. So you have to prepare table. You have to prepare a table shows interest included in each installment. Interest included in each installment. Yes sir, no students? Yes sir. Now first write down, first column names are very important. How many columns? Year, opening balance. Here you can write installment first. First you can write installment. Next you can write interest. So installment minus interest you get principal amount 5. Next 6 1 closing balance. 6 1 closing balance. So like that you simply calculate. Okay. So after that entries. What is the requirement of the problem? Show the entries without narration. Asset account. Fine. Anyway we prepare asset account. Mr. Y account for 5 years assuming that the purchaser charges depreciation 20% on straight line method. In whose books we have to prepare accounts? Purchaser, hire purchaser. Who is the hire purchaser here? Mr. X. So in the books of Mr. X, after completion of this table, in the books of Mr. X, what we do? We write entries. For how many years? 5 years. Entries for first year only very important. Why? First year we recognize, we write entry for purchase of asset. Asset account debit to Y account 30,000 cash price. Down payment. Yes sir. After that interest. So this interest amount we take from this table. Okay. Next one, installment amount paid. Next one, depreciation charged. Depreciation will be charged on cash price 30,000 into what's the depreciation rate here? 20% on straight line. So 6,000 rupees. At the end of the year, this interest 1,300 plus depreciation 6,000 we transfer to P&L account. Next, second year onwards, which entries will be repeated? Interest amount due, installment paid, depreciation and transfer to P&L. These 4 installments only. What is this? Oh, I don't know. I don't know this. Okay. Maybe it is a gesture problem. That's it. This video is recorded in MacBook. Na? Maybe gesture problem. Okay, fine. I don't. I'm not involved in this. Okay, right. Next year's onwards, these entries are repeated. Next year onwards, these entries are repeated. Look at same entries. From that table, we take these entries. Hope you understood this. Now, asset account. From the above entries, we prepare this asset account. You just observe one by one entry and post it. So, year by year, you prepare this entry, this account. That's it. Now, if you want, the same information can be recorded in the books of Y also. The books of Y. So, the same table applicable in the books of Y also. Here, what we write in the books of Y journal. Here, we are purchasing asset. There, he is selling goods. So, what is the entry he will record? Y X account debit to sales account. Receipt of amount, bank account debit to Y X account. Next, interest, X account debit to interest account. Receipt of installment, bank account debit to X account. Depreciation anyway he will not charge, and transfer of interest to P and L. So P and L interest account debit to P and L account. That's it. Over. Account Y X account he will prepare in the books of Y prepare X account. Here everybody. That's it. And the next important concept, remaining problems you can check it. The next important concept is reposition. Reposition of the asset. Suppose if purchaser, the higher purchaser fails, the higher purchaser fails to pay any installment, then higher vendor will take back the asset. I repeat, if higher purchaser fails to pay any installment, then the higher vendor has the right to take back the property. To take back the property. When the asset is taken back, then what is the accounting treatment? That is the question comes default and reposition. The reposition may be of two types. One, full reposition, reposition, or partial reposition. Full reposition or partial reposition. What is the meaning of this, sir? Suppose I have sold 10 cars to you. 10 cars to you. Okay. So either I may take total 10 cars. If I take back all 10 cars, then that is called full reposition. Full reposition. If I take only 5 cars out of them, if I take 5 cars out of them, then that is called partial reposition. If it is full reposition, then it is easy. Then it is easy. But if it is partial reposition, then it becomes difficult. But if you observe in the past 4 attempts, they didn't ask any question from this reposition. But we have to discuss this because in the future attempts they may ask. Okay, the most important aspect in this hire purchase is calculation of cash price and interest part. If you observe the previous 4 papers, you observe this calculation of interest and preparation of machinery account is nothing. Only the concept is calculation of interest portion and cash price. Here, now look at first. Come to full reposition. Full reposition. First in the books of hire purchaser. So hire purchaser has to give asset to the hire vendor, na. So what is the entry we record? At the time of purchase of asset account debit to hire vendor. Now we are giving back the asset to hire vendor. Entry hire vendor account debit to asset account. Sir, this entry at what price we record, sir? Simple. This entry is passed with the amount due to hire vendor. We have to record this entry for the amount due to hire vendor. Is it clear? Right. Next one. Now hire vendor account is closed. Now asset also we have to close now. Yes. Now look at asset account. If debit side is more than the credit side, then it is loss for us. If credit side is more than debit side, then it is gain for us. Yes or no, students? Yes. So that is transferred to profit and loss account. Here in the books of hire purchaser, it is easy. But when it comes to hire vendor account, the accounting is little bit difficult. Look at hire vendor is taking back the asset. So asset he received. So what is the entry he records? Means he create a new account called goods repossessed account. Goods repossessed account debit to hire purchaser account. He will record the entry at agreed price. This entry is passed with the revalued amount of goods repossessed. Means I am taking back my asset. At the time of taking back my asset, I will value the asset cost, or I will value the asset. That price only I will record here. Goods repossessed account debit to hire purchaser account. Okay, next. Now we have taken back this asset now. This asset is used by the hire purchaser for some period of time. Now what we do by taking this asset, simply we again try to sell the same to other party. We again try to sell the same to other party. To sell this, if it has any repairs, first of all we have to get repaired it. For that, we have to incur some expenses now. Entry. Goods repossessed account debit to cash or bank account. Now we sell asset to somebody. Entry. Cash or bank or debtor account debit to goods repossessed account. This time not hire purchase sales. This time goods repossessed account. Because which goods we are selling, whatever the goods we have taken back, the same we are selling. We are not selling fresh goods. Hope you understood. Now we have taken the asset from hire purchaser and we have incurred some expenses on it and we sold the same. By doing this activity, what is the profit or loss to me? By doing this activity, what is the profit or loss to me? We need to calculate that. After calculating, so how to calculate this profit or loss on sale of goods repossessed? For that, you observe repossessed account, goods repossessed account. You observe goods repossessed account, then you get profit or loss. If debit is more, loss. If credit is more, profit. For loss on sale of goods repossessed, profit and loss account debit to goods repossessed account. Right. Next one. If it is profit, na, then the entry becomes reverse. I said already full reposition, the problem is easy. But if we get partial reposition, then only the problem is difficult. Now we try to solve a problem on full reposition. For that, observe illustration 7. On 1/1/2021, A purchased 5 machines from B. Payment was to be made 20% down and the balance in 4 annual installments of 280, 260, 240, 220. Here, down payment they are giving as a percentage 20%. But in the previous problems, they have given down payment in rupees amount directly. But here they are giving a percentage. Now tell me, what is the total amount here? 280 plus 260 plus 240 plus 220. Total is 10 lakhs plus down payment plus down payment. This becomes higher purchase price. Higher purchase price. But what we have to calculate? We have to calculate cash price. Cash price. So how do calculate cash price? Simple. Higher purchase price minus interest. From higher purchase price, you deduct interest. So that here first we have to calculate interest part. To calculate interest, you people tell me what is the information they have given. Check. Cash price is given? No, sir. Installment is given? Yes, sir. Rate of interest is given? Yes, sir. Then identify which scenario it is. Identify which scenario it is. Sir, it is the scenario of third one, sir. Third one, sir. Means down payment is given, interest is given, and installment amount also given. Installment amount also given. Hope you understood, students. Yes, sir. Then reverse calculation now. In this case, how do we calculate? Reverse calculation. So follow the same here. Follow the same here. From fourth installment, you first try to calculate interest. Clear. After calculation of that, here already they have calculated. Observe. So what is the opening balance outstanding? 8 lakhs. 8 lakhs. To this, what we have to add? Down payment. To this, what we have to add? Down payment. Then we get cash price. But down payment is given in percentage now. Then assume X is the total cash price. X is the total cash price. Then total cash price is equal to 8 lakhs plus 20% of X. Solve this equation, you get 10 lakhs. So this is our cash price. Now we start recording entries at this cash price. Observe. Yes. Next one. Commencing from 31st December 2021, we have to pay the amount. The vendor charged interest at 10% per annum, a writes off depreciation 20% per annum on original cost. Till here, it is good. But look at what happened next para. On A's failure to pay the installment due on 31st December 2022, on which date the amount is not paid 31st December 2022, we repossessed all the machines on 1/1/2023. We repossessed the machines on 1/1/2023. That means till 31st December 2022, we have to record normal entries. Normal entries. On 1/1/2023, only the problem comes of repossession. Okay. And valued them on the basis of 40% per annum depreciation on WDV. This depreciation is charged by whom? Higher vendor. This depreciation is from higher vendor point of view, not from higher purchaser point of view. Here, we, after incurring 6,000 on repairs, sold the machine for 2,66,000. After repossessing the goods, B incurred 6,000 rupees repairs, and after that he sold for 2,66,000. Prepare relevant accounts in the books of A and B. You don't get this type of problem. Why? Because it's a lengthy problem. It's a lengthy problem, and this much of lengthy problem for 7 marks, no, not good. Okay, that's why first you calculate this table. After the look at in the A books, first we record the entry for purchase of asset. Is it clear? After that, depreciation we charge on 20% straight line basis 2 lakhs, balance 8 lakh. This becomes opening balance. Second year also, when is the default date? This you need to identify. When is the default date? 31st 12 2022. Till this date, everything holds good, but we failed to pay installment on this date. That's why he is taking back his asset on 1/1/2023. Clear? Now look at. So that for this year also we calculate depreciation. What is the balance of asset left? 6 lakhs. This is very important. Wait. Now come to B account. Total amount payable to B. How much? 10 lakhs. This is cash price. Instantly we are paying how much? 2 lakhs. What is the balance left? At the end of the year, what is the interest payable? 80,000. Observe this table. 80,000 is the interest. This is first installment. 80,000. Second installment. 60,000. Third installment. 40. Fourth installment. 20. Here, 80,000. Now, what is the installment amount here? First installment, 2 lakh 80. So, 2 lakh 80,000 we pay. Remaining amount left, 6 lakhs. Now, this becomes opening balance. What is the interest for second year? 60,000. Total amount due 6 lakh 60. But here we failed to pay amount due to him. So, what is the total amount due? 6 lakh 60. Now, this becomes opening balance here. By balance brought down. Here on 1/1/2023, we are giving asset back. What is the entry we record? Higher vendor account debit to asset account. What is the balance we have in higher vendor account? 6 lakh 60. The total account we close now. This is transferred to asset account. Observe. Now, asset value is how much? 6 lakhs. But higher vendor is taken at 6 lakh 60. Here we have a profit of 60,000. Just a minute. Here we have a profit of 6 lakh 60,000 rupees profit. This is transferred to P&L account. Now, in the books of higher vendor, completely it is reverse. Completely it is reverse. Observe carefully. Yes or no, students? Here the problem comes in the books of higher vendor account. At what price he is taking the asset? See, generally asset value is 10 lakhs. He is depreciating it 40% on WDV basis. First year 4 lakhs. 6 lakhs minus again 40%, 2 lakh 40. 3 lakh 60. Yes or no? He will take the asset at 3 lakh 60. Based on that, do the accounting. Is it clear?